Hello and welcome to ET Future of Money Summit. For many of us, more so in urban settings, technology has dramatically changed the way we live, work, and play. What that has also done is transformed the way we bank. And that's changed our banks too. They've had to push beyond the brick and mortar, go digital, ally with fintechs, all in an attempt to scale, but also be sustainable. I'm Miloni Bhatt, and I have with me today someone who's actually led the journey for some of the big banking institutions. Natasha Patel is the former head of global payments and cash management at HSBC. She's currently the CEO of India Sanitation Coalition at FICCI. And I'm really pleased to have her with me here to talk on how today banking is being transformed and what can the traditional players do to thrive in the digital era. Natasha Patel, thank you so very much for your time today.
Thank you.
You were a banker for 30 odd years and, really at the forefront in the banking industry. Now, you moved gears to be part of the development sector and you have a really unique perspective, so from your vantage, when you see the way fintech and within it, wealth tech, lending, payments are challenging or changing traditional banking, how do these traditional financial institutions respond and then evolve, especially, when it comes to banking, say the underbanked and maybe, the point of wider financial inclusivity?
Okay, that's a very interesting question and something that I'm very, very passionate about. So very happy to talk about it here today. Fintech, which is a combination of finance and technology, is the banking system's answer to overcoming the limitations of geographic reach, speed of delivery, and the type of products that it gives to its clients. Its main aim is to reach as many clients as possible, offering them products and services that in a traditional setup, they may be challenged to offer, specifically due to the costs involved. And most importantly, it has given society a new way to consider risk, which is integral to all banking products and services. As I mentioned earlier, geographic reach is one of the main limitations of traditional banking. At the turn of the century, I don't know whether you will remember this, but Citibank introduced a service called Suvidha, which basically encouraged its clients not to visit premises of banks for any of their services, which would then get delivered to them digitally. And I remember it was something which was so revolutionary. Every other bank was like, wow, we're kind of going into the space age, The aim that Citi had at that time was to, of course, lower their cost and the footprint at their branches. And I remember pretty much at the same time at HSBC, we did an exercise to understand the cost of how much a client presenting a check for clearing to the bank would be. And that was approximately 16 rupees. Now, everybody knows clients don't pay for checks. So you can imagine the millions of checks that got cleared by banks, day in and day out. And effectively, that cost was entirely borne by the bank. So clearly, something had to be done, from that perspective. In India specifically, the cost of providing banking services accompanied with the growth of the technology sector were both the major catalysts to the introduction of digital solutions. And this saw the rise of fintechs as a natural corollary. One can say that the rise of fintechs was pushed by the need for digitization in the banking sector, highlighted by the need for financial inclusion. The creation, and you will remember this was around 2002, the creation of the RTGS system for high value clearing, as well as the NEFT for checks, the low value checks. This helped banks to give value to their clients quicker and in a timely manner. But it was also the same solution that provided fintechs the system that they required to create digital pathways to push forward last mile connectivity, accompanied by products such as instant credit for their clients. So this was clearly something that kind of went hand in hand. The banks also got the benefit of it, but definitely the fintechs were going to take advantage of it. Now, however, there was one thing that the digital banks could not replace completely, at least in today's context, and that is brick and mortar branches, which is a direct result of the inability to use digital tools by a large section of our population. And this is something that India has to always keep in mind, at least for the immediate future, I would say the medium-term future, and if we don't do anything about it, even for our long-term future. This is clearly something we need to work upon. Countries like India still have a large part of their population that are yet to get familiar with digital banking. Until it becomes more widespread, traditional brick and mortar branches are here to stay, at least in the medium term. India has over 560 million internet users and is the second largest online market in the world. It is estimated that by 2023, there would be 650 million internet users. This is primarily urban India, okay? The story is very different when we come to rural India. While this number is impressive, it is important to note that the internet penetration across the country is only 50% as of 2020. Okay, so that is again something that we need to keep in mind. The big challenge today is advancing the digital footprint across rural India. As per the National Digital Literacy Mission program, rural India, which covers around 6.5 lakh villages and approximately 506 million inhabitants, has approximately 336 million internet users only. And this is mainly on account of challenges faced due to last mile connectivity, something which the government is consistently striving to solve for. Another interesting statistic we need to consider is that 60% of women today across 12 states and union territories have never used the internet. This is one of the primary areas of focus for the government, mainly on account of them being the growing workforce, especially in rural India. So under the National Digital Literacy Program, there is a plan to educate one member of each household as digitally literate. And all this is to say that while India is a bit away from total disintermediation of traditional banking services, the country is rapidly recognizing the potential of digitization to meet the challenges of geographic reach, speed of delivery, and the type of products its citizens require. The way forward then is to marry the benefits of RegTech, InsurTech, WealthTech, payments, all the new techs that are coming up to traditional forms of banking, keeping what is relevant to sustainable growth from each and creating a new form of banking which would use the best of both systems in the future. So that is really the way I see this going forward, hand in hand.
Right. So it's a handshake between, the new tech that's coming in and the traditional, brick and mortar banking. And of course,
Absolutely.
Where banking continues to provide that last mile connectivity, especially if we have to reach those people who are underbanked. All right.
Absolutely.
But banks and other financial institutions have been highly regulated, right, in India now, all to ensure that, the Aam Janta does not lose money. Fintechs are required to work with the traditional banks, and that's the way, just so that they've been put on a straight and narrow path. Now, Fintech was a $50 billion market in 2021. It's set to be something about, according to PwC, a $1.3 trillion market opportunity in 2025. Yeah. The growth was fueled by, say, innovation and then light touch regulations. From your vantage, how do you see these regulations changing, if at all? And do you think that banks per se are ready for it? And, how do you see that then all impacting the overall system?
So clearly, this is something that everybody in the financial services industry is worried about, right? I wouldn't even say worried, but I think trying to look at what could be the best solution. And there's no one best solution. There are several best solutions, which will either be viable in the short term, the medium term, the long term. So no one has a clear line of sight of what's going to happen in the next 20, 30 years. Just to give you a little anecdote, something as simple as transaction banking is cash management and trade put together. That kind of originated in the US in 1973. And, it was a very funny system. I won't go into it. It's very detailed, but suffice to say that by 1999, that had entirely got, it had become electronic. Right. And so the manual part of it had gone away and it had completely become electronic. But the US still continued to clear 60% of their checks, manually. That was an insane, statistic, but effectively it actually existed. Things have changed since then, but as you can see, different countries, different systems, expense cost is one of the biggest things. So just to answer your question around regulations, among the principal regulatory challenges facing the banking industry at present are those posed by the use of financial technology, including compliance, which, as you know, since 2008 has become so important, and incorporating fintech into the systems and structures and ensuring cybersecurity. So this is clearly the single most important agenda for most banks, right? The subsequent increase in regulation as a result of these challenges may threaten Indian fintech companies in the short term by limiting innovation and raising operational costs. However, regulatory transparency will bolster the sector in the future by enabling it to earn customer confidence and bring more capital. It's just a question of time, right? So regulators will likely pay greater attention to fintech firms as they grow exponentially. They have to, because that's where the mass will be going. Few platforms have already been introduced, such as Bharat Bill Pay System, payment bank licenses, unified payment interfaces, and so on and so forth, right? The central regulatory body has also introduced regulations for new sectors, such as P2P and aggregators based on a consensus-driven strategy. So a lot is being done by the regulator in terms of wanting to marry the two together and trying to find the right solution for the populace.
So you're just saying that it's a matter of time, and that there has to be consensus within the system. But do you feel that the regulations are too much, and when it comes to sort of being able to regulate and then allowing innovation, there is a very fine line that they have to tread?
So I would say it's important to look at this problem also from the point of view of the regulator, right? Why did we put the regulator in place in the first place? The world has seen many, many financial collapses. 2008 was just one. There were many, many others before that. Banks have been known to actually, be the centers of fraud in so many different ways, right? So the role of a regulator is not something that I would ever want to do, frankly. It's just such an intense and an extremely complex role. So if you consider the issue from their point of view, then there are some very valid challenges that they need to address. Let's look at those challenges first, okay? So across the globe, fintech has democratized the financial services landscape. That is something that everybody accepts. But the rapid pace of digitization, coupled with the decentralized nature of fintech, has posed unique challenges to the regulators, who have been used to supervising central hubs of activity and well-defined entities. And this is clearly their big issue. Regulators today are striving to strike a delicate balance between ensuring data security and privacy on the one hand, and facilitating the free flow of data on the other. The way I see it is that in the future, policymakers would need to swiftly respond to the emerging technologies and the fintech models by fully understanding their implications on the financial system and reining in its potential risks. This is a big ask, as it presumes that regulators will always be up to date with all the latest changes in technology. They will be able to understand the potential risks that could pose could be posed to the existing financial systems, and they would be able to swiftly create sufficient regulatory measures to control these risks. It is, asking the impossible, really, because not only do they have to be so, like a Superman, having different arms to be able to take care of everything, but most importantly, they have to deal with the archaic and legacy systems that already exist within traditional banking. How do you make those, relevant to the future world? So these are, again, huge issues that regulators have to grapple with. I just want to take a minute to talk about risk. I mentioned understanding risk right at the beginning. And I also said that it was one of the major differentiators between traditional banking and fintechs, right? This is the most critical challenge facing the regulators. While fintechs could help forge a more diverse and resilient financial services ecosystem, The increased interconnectedness and entry of disruptive operating models could engender new systemic risks, such as concentration and single point of failure risks. Now, these are huge issues. And, this is, again, something that needs to be thought through.
Okay. Yeah. I want to talk about banking as a service. Open banking, changed the game, but banking as a service has taken the game to just another level, right? Yeah. So banking as a service allows non-bank to offer core financial services to customers by integrating with the bank's APIs. Now, what, according to you, is the potential for banks? Is it sustainable, scalable? But more importantly, from where you are now, do you see a driving inclusion?
So, BaaS, or banking as a service, this is more of an end-to-end model that allows third parties to connect with bank systems directly via API, right? So they can build bank offerings on top of the provider's regulated infrastructure. Now, adapting BaaS can open up a new revenue stream for incumbent banks and increase their customer reach, just as we talked about earlier, okay? And with COVID having thrown traditional banking operations into disarray, it has also established that new fintechs in the financial services business are very much the popular and are very much the I would say flavor of the month, if you can call it, or flavor of the year, because they are effectively the ones that are allowing people to actually move their money from place to place. Now, with the RBI's push towards digitization, we can safely assume that this trend will inevitably make fintechs proliferate deeper into the incumbent banks market. So this is clearly an area that traditional banking has to be aware of, and I'm sure they're aware of it, but they also have to make space for it in their future plans. Fintechs like Open, Bajaj Finance, Razorpay, Paytm, Cashfree, these have all created new benchmarks for customer experience and transparency. And again, something that traditional banks may not be able to do given their limitations. While traditional banks are losing their market share, some of them, however, the visionary ones at least, have acquired technology platforms that are open up to infrastructure to facilitate third-party payments. Now, I'll give you some examples which are quite interesting. Like, for example, State Bank of India partnered with Uber to provide vehicle finance to drivers, or RBL collaborated with Razorpay for digital merchant onboarding. Then you had Open that used ICICI Bank's APIs to manage payments, billing, and accounting for startups. Today, I think pretty much the bulk of India uses that. Again, RBL collaborating with Bajaj Finance to give vehicle loans. So there are lots and lots of these examples. And this is where banks are becoming nimble. And for that to happen, they have to first look at their own core infrastructure. That is their backbone, as they call it. It is a firm belief in the market, of course, that the open banking API ecosystem is just the start of many such revolutions. And BaaS is expected to reach a value of 7 trillion by 2030, which has become a must for traditional banks to survive and remain relevant for the future. That's my view.
So institutional investors, now I want to talk a little bit about ESG, institutional investors and retail banking customers are increasingly demanding that financial institutions uphold ESG standards, right? And the view is that our long-term future won't be sustainable if our practices or the way we do business is unsustainable. The banking sector has already realized this, and we're seeing them adopt and work at SDGs. From your vantage, how are you seeing the progress? And, how do you see fintech again, along with banks, becoming a game changer, if at all?
So if I look at the SDGs today, every single one of them requires one very basic requirement as far as money is concerned. And that is the ability to move money, not only faster, but also to be able to get money to locations which are absolutely not on the map, if I can call it the financial map, right? Now, traditional banking is not in any shape or size has been able to answer that question. So the only way that can happen is through fintechs. Right now, the way regulators are looking at fintechs, I would say the bulk of regulators, I won't say everybody, is trying to regulate them from a fraud perspective.
Right.
But I think and this may sound a little revolutionary, but I think fraud is a necessity in banking. It comes as part and parcel of what banking is all about. So to say that we will have a system which will be completely fraud-free is not possible. You know, fraud will always happen. But if we are to meet the SDGs, then we have to understand risk. And that we come back, you know, to the same thing that I was talking about earlier, which is how do we understand risk? Do we decide that this much risk is good enough so that we can actually achieve what we need to achieve for the SDGs? Or do we turn around and say, no, it's more important to avoid fraud, so we don't take that risk? Then I'm afraid we will not be able to achieve what we are planning to achieve from a financial perspective. So I'm just giving you that correlation.
All right. So basically you're saying that, you know, the fintechs and the banks have to work together. Absolutely. And essentially, you know, to try to reach the underbanked or the unbanked, you know, they are the way forward. I mean, that kind of marriage is yes, the way forward.
Absolutely.
And regulations essentially have to support that rather than, you know, putting in excessive guardrails.
And putting in the right, sensible, practical kind of risk measures. I think that's very important. Yeah.
Okay. You know, I have one last question for you. You know, sure. Especially this is on digital revolution and, you know, disruptive technologies like AI, ML, cloud computing, IoT, and all of that. And, you know, they've really transformed the way users are interacting with financial services. So how do you see traditional players adapting to embrace all of these technologies and to thrive, you know, and will we see these traditional spaces actually, do you see this moving fully online, you know? So will banks be resistant in kind of embracing certain technology?
So I don't think it's a question of one or the other. Okay, I think it's a question of adaptation. So let's look at the basic function of a bank. When it was first started, what was banking? Banking was about transactions, right? About being allowed to transact in terms of sending money somewhere or receiving money from somewhere. Then slowly over time, they added a lot of other services to it. So I think what is important to remember is where society is moving and how banking is adapting to that need of society. If society is moving towards actual last mile connectivity, then banking has to be able to provide that. And I don't think anyone has the luxury of saying, like we did in maybe a few years ago, that I am a foreign bank operating in a local area. You can't do that anymore, because then what you need to do is say, I'm a niche bank. I only function in a particular area, and this is exactly what I'm going to be doing. Then you become a boutique, right? But if you are a full-fledged bank, and if your aim is to actually respond to every customer that walks through your door, then you have to be able to be nimble enough to understand exactly what those customers want. And very soon, those doors won't exist, because as we all know, digitization is going to be the answer of the game. Nobody believed that India would have internet the way it did. And from 2000 onwards, the country has completely changed itself, right? I mean, if you'd asked anyone in 1995, they'd have said, what are you talking about? You know, India will take eons to be able to, get, for example, telephones. I remember 1994 when, the first mobile phones came out, they were huge, long, big things. And, we'd carry them and they were just so embarrassing because they were so big. And look at us today. So I think every country sets its own pace. As far as India is concerned, I think we've set a very, very firm pace for ourselves. It's very fast, and banks in India have to to what the populace wants. Otherwise, they're going to become irrelevant.
Okay. I have one last question for you. And this is more from the conversations we had, before we actually began this formal conversation on ET Future of Money Summit. But, digital financial services are designed for people who are decision makers, who are literate, who are income earners. And many of these things are not true for many, many women in India, right? So how do you see And how do you think we can tackle this vast gap between digital financial services and, reaching the women of Bharat?
So, I would beg to differ on one point that people keep making, that, digital services are only for literate women. I can tell you that in rural India, we have seen over the last several years, women who are illiterate, who have never gone to school, but when you give them a phone, for example, they manage to understand it and operate it and actually transact through it very, very quickly. I'll give you an example. In 2000, there was a very interesting exercise that was done by a company called ITC, which was eChaupal. This was done, eChaupal was really a system where they would, take groups of, say, 10 villages, and they would, in one of the villages, they would choose a sarpanch who was smart and wanted, to take his village forward. And within his house, they would put a VSAT and a screen. And through that VSAT and screen, they educated those villagers about not just the type of fertilizer that they should use for the grain, but the type of grain they should grow. They did a whole range of things in terms of education for the villagers. But more importantly, they also gave them access to the market. So when I went down to one of these hubs, and I actually sat with the sarpanch, and he showed me the Nikkei index. So this is all commodity exchanges, right? He showed me the Nikkei exchange. He showed me the New York exchange. He showed me London, and he showed me the prices of his commodities. And he said, "Dekho didi, idhar itna paisa ja raha hai, idhar itna paisa milega." Lekin hamare hub mein, because they are smart guys. ITC didn't do this for just the blue eyes of the villagers. They did it because there was a commercial interest in this for them. They actually had set up hubs where they were giving value for the grain to the clients, and they were quoting their price as well. Now, in the mandis, where normally these people would sell their grain, the grain would get sold for, approximately 40% of the value of the grain would go to the farmer, 60% would get taken off by the mandi. But these guys would actually give them 100%, because it's the water in the grain that actually tells them what the value of the grain is. And I was amazed to see that this guy knew everything. So he educated all his other farmers. Every evening they would have a eChaupal where they would sit down and discuss all these things. But the interesting thing was the women. The women learned about banking through that system. So it was the women who actually went out and got insurance policies, which was made available to them by the banks on the computer itself. So it was one computer, 10 villages, all learning through it. Amazing.
Natasha Patel, thank you so very much, for this wonderful conversation. And it's a really lovely anecdote for us to end our chat today. I wish you and your colleagues at ISC all the very best for all the work that you're doing. Thank you once again for your time and for your thoughts today.